Debra Borchardt, and this is your midday market update. Well, all our indices are in the red territory right now, seeing a little bit of selling, but nothing dramatic. Also, what's happening is our yields are going up on the Treasury, and joining me now is Keith Bliss from Cuttone. So, Keith, you and I were just talking about this. You know, the yields, they were higher on Friday than the bond market was closed yesterday. There's a lot of concern that we could see these yields moving up to that 3% zone, which is not where we want to be.
No, not at all. I mean, we're still not out of the woods yet from an economic perspective, so I think the yields moving up is a little bit of a troubling sign. If you think about it in lots of ways, if yields normalize where the 10-year yield is generally between 3 3/4 and 4%, just think of what that would do actually to the interest payments on our national debt. They would go up pretty dramatically. The yield move is driven, again, as we were talking, the yield move is driven primarily on the ECB rate cut. The dollar's been rallying. In our work, we've got the dollar at an overbought state and the euro at an oversold state at this point in time. So I think we'll see some sort of reversion back there. I think anybody planning on the 10-year yield being up around or above 3% by the December meeting is probably going to get a very bad surprise in hand, because I still believe that the Fed is going to come out in the December meeting, say they're going to keep the quantitative easing program in place, which means yields will come in back down to 2.5% pretty quickly if they do make that. I just got to the point about a year ago where I decided that the 10-year yield is going to be where Ben Bernanke wants the 10-year yield to be. And right now, he stated as long as it's around 2.5%, he's happy with that. So I think we'll see it vacillate back and forth, but get back to 2.5% before the end of the year.
All right, another thing that we're definitely going to be focusing on this week are earnings out of some of our big retail giants, Wal-Mart, Macy's, to name a couple. You know, these numbers are going to include fall. We know that back to school, if it happened much later. We've got we got versus Sandy comparisons from last year. Very, very promotional out there for retail. These numbers could disappoint.
They could, and in fact, Walmart's an interesting case because they've missed the last 2 quarters from the estimates. Sales keep going up, but Walmart has to show almost double-digit gains in their top-line sales for Wall Street to be happy. So I think that Walmart reports on Thursday. That's going to be the most interesting report. It is normally, but I think even more so this quarter based upon their performance the last 2 quarters, but also the comparisons to a year ago. But also what they're going to say for the Christmas season. The Christmas season is odd this year because the traditional shopping spread between Thanksgiving and Christmas is contracted this year because Thanksgiving falls so late on the calendar. Again, the retailers are very important to what goes on in the broader economy. Everybody needs to realize that, because we're 70% consumerism inside of this economy, and if the retailers are not giving us good signs about what they see into the future, then that's actually a red light flashing pretty brightly for the broader economy. So.
Will they blame it, though, on the government shutdown and say, wow, you shut the government down for a couple of weeks and that really hurt us, and that's what did it?
Retailers are a funny lot. I think a lot of times they can't explain why they missed the number, so they'll blame it on everything. So, listen, if Walmart misses the number, expect them to say something like that. I discount that completely. The government shutdown was for 16 days, and all the furloughed workers got back pay anyway. So we could make the assumption that once they got the pay in their pocket, they were going to go out and restock their items anyway. So, again, we start the retail earnings in earnest this week. Kohl's, Macy's, Walmart, they're the big ones. Next week, we then get Costco coming in, and Best Buy. Again, 2 other bellwethers. The online retailers, by the way, Amazon and eBay, which reported earlier in the season, they actually have pretty good quarters, and Amazon suspects that they're going to have a good 4th quarter. eBay does not. So we're getting a mixed bag here. I want to see the bricks and mortars, what they're going to say. Hopefully it'll be a good quarter from the 3rd quarter, and they give us a good sign for the 4th.
All right. Well, of course, we will give you up-to-date information as those companies report at TheStreet. That's Keith Bliss from Cuttone, and I'm Debra Borchardt reporting for TheStreet.